Hello and welcome to BQ Prime. A very good morning to all the viewers. You're watching Trade Talk and I am Hiral Dadia. Overall, if you go to see yesterday's session, an interesting day where the volatility was high and the markets did see a decline. In fact, bank nifty stocks did see profit taking as well. And this is after the RBI's liquidity measure and wherein they've imposed an incremental CRR of 10% in the near term on deposits that have been received over a certain period of time between May to June. In fact, they've revised the inflation estimates for FY24 upwards to 5.4% and kept the repo rate unchanged. It was interesting how the broader markets also ended in losses. If you see in terms of the F&O activity, the highest put OI is seen at 19,500, whereas the highest call AOI is seen at 19,550. Now, with this, you've clearly seen that the Nifty has been consolidating in that 19,500 to 19,600 kind of range. And this is the phenomena that we've been witnessing over the last four trading sessions. In fact, a decisive breakout on either side of the range will actually set the tone for the next leg of the rally for the markets. A break below 19,300 will lead a downside and a fresh trigger of selling pressure could come in. However, if we manage to close above those 19,800 levels, it could lead to initiation of fresh long positions. So watch out for these levels pretty closely. If you see in terms of the bank nifty as well, the downside support is placed at around 44,300 levels, and a break below this can take the bank nifty until 43,500. For an uptrend to resume in terms of bank nifty, we actually need to see a strong close above those 45,100 levels as well. So it's an interesting move that we are watching out for, but let's quickly look at the stocks that have increased in yesterday's session with high volumes. Zee Entertainment has been the stock of the day yesterday. Let's see if it continues to be the stock of the day today, because a 16.5% up move, strong volumes on the back of the NCLT approval. Max Financial Services, Trent, India Cement, as well as Sun TV. These were a few of the names that did see good volumes and good up move in yesterday's session. But what is in store today? The biggest news announcement is with regards to the MSCI rejig, and this is the August quarterly review that they have done. If you talk about the Indian market, in totality, there are 8 additions and 1 exclusion. Now, what does this actually mean for the markets from an inflow perspective? Overall, brokerage houses are indicating almost a $1.5 billion inflow that could be led due to the back of this retake. Stocks which are added are Cummins India, Ashok Leyland, IDFC First Bank, Astral, HDFC AMC, Supreme Industries, REC and PFC. And REC and PFC are interesting ones as well. Whereas there is just one exclusion, which is ACC. Now, let's quickly break it down in terms of what it would mean for these individual counters. And this is based on the analysis that MK has done. Comments, what they've indicated any which is that the stock has been trending upwards in 2023. In fact, in the last 7 months, the stock is up almost 70%. But in the last 7 trading sessions, Cummins has fallen around 10% with a 40% increase in open interest. Now, inclusion in MSCI index could actually bring about a short covering rally in the stock, and it is expected to include an inflow of almost $108 million. Talking about IDFC Bank, REC, and PFC, all the 3 counters have gained more than 60% since the start of April 2023, and an inflow of around $107 million, $89 million, and $120 million respectively is expected from these 3 names as well. Moving on, talking about HDFC, AMC, as well as Astral. Now, these counters in the last 1 week have seen a long build-up. And if you see the open interest addition, that's up around 5% and 33% respectively for both these names. Now, the expected inflow is in that range of $82 million and $95 million respectively. Lastly, talking about Ashok Leyland, the stock is up around 35% in the last 2 months, and Supreme Industries has been on an uptrend since the start of 2023. Now, both these stocks could see an inflow of $106 million and $91 million respectively. Now, let's quickly talk about ACC. That is the only one that is deleted, and the outflow that it can lead to is around $46 million. So this is what is the analysis by MK. So it's going to be interesting to see how all these counters react in trade today as we open up. But moving on, let's quickly look at a few of the other names on the back of earnings and newsmakers. You have LIC, which has reported numbers. Monal is standing by to give us more in terms of how have the LIC numbers panned out. Monal, over to you.
Morning, Hiral. LIC has been a mixed bag. While its profit did jump 1,298%, the company did say that its net profit is not comparable because it has changed its accounting policies. However, there is still a jump. Overall revenue was up 12%, but net premiums came in flat. The VNB margins is what people watch out for because LIC had given a very strong guidance last year that it's going to inch it up quicker than all the other listed private players. And that has come in at par. It was 13.7 versus 13.6 in the June quarter last year. So that is pretty flat. Again, VNB, the overall value of new business, is down 7% at 1,300 odd crores. Its market share is also going down. So its market share was 61.42 as on June end versus last June when it was 65%. The company and the management did say that eventually the VNB margins are expected to get better because they're expecting a pickup in the non-par sales, but they've not committed on the numbers and the timeline. So it's a wait and watch. Now for Biocon, the results were good in terms of the revenues. EBITDA, revenues were up 60%, EBITDA up 79% year on year. Margins came in at 20.9%, but all of these were below estimates. The net profit year on year fell down by 30%, while also coming in way below estimates. So it came in at 101 crore versus 157 crores. Now the company said that it has upped R&D expenditure by 59%. And it's gotten a leg of growth from Biocon Biologics, which grew 106%, aided by the Viatris acquisition which happened. This comprises overall around 57% of its total revenue. Its research services arm, which is Syngene, grew 25%, while generics was up 15%. Overall, not essentially bad, but it's not at par with the estimates for sure on all fronts.
Right. Thanks, Monal, for getting us the details of LIC and Biocon. Both the counters that Monal has been tracking will be in focus. Clearly, for LIC, the profits have surged multifold, as Monal was mentioning, to 9,544 odd crores as well. So it's going to be interesting to see as well. But on a sequential basis, the profits have fallen 29% from a 13,428 crores. And net premium income has also dropped 25% on a sequential basis. And with regards to Biocon, clearly, it's missed the street estimates as well. So interesting reactions that could be expected on both these names. But moving on from the auto pack, you have a Hero MotoCorp that reported numbers. Vinay is standing by to get us more in terms of how the quarter has been for the company. Vinay, good morning. What are you picking up and what are the key takeaways?
A very good morning, Hiral. So the profit rose 32% to 824 crores, but it missed estimates because the margin, even if the margin came and surprised on the upside, but if it was not for the one-time loss that they witnessed at their voluntary retirement scheme that they had launched to overhaul their employees, the employee structure that they envision that they will have a bigger team of younger people and with new talent skills. So that has taken an impact on the profit of the company because analysts were estimating a 40% jump while the jump was just 32%. The jump in the profit was helped by the higher average selling prices and improvement in the profitability as we saw the margins surprise on the upside. It didn't came on the back of higher sales because the volumes had fallen 3% year on year to 13.5 lakh units. The slower demand for entry-level motorcycles in the rural market is being blamed for it. And for the right reasons, company has said that they will look at the premium play more seriously. The margin that came in at 30.8% compared to the 11.2% last year was helped by the softening of commodity prices, accelerated saving programs, and judicious price increases, the company said. So all in all, the company surprised on the margins, but missed estimates on the profit front. Back to you.
Thanks, Vinay, for getting us the details. It's going to be interesting to see how Hero Motor reacts in trade as well, because clearly there has been a corporate governance overhang as well. So it's an interesting one to watch out for. But moving on, a whole host of other companies from the broader markets that have reported numbers. Himansh and Mihika will be getting us more details on it as well. Himansh, good morning. What's on your list? I believe you're looking at a NBCC, Orchid Pharma, Sanofi, Paramount. How have the companies performed this quarter?
Hi, good morning, Hiril. So quite the assortment of companies I'm tracking today. So we have MTAR Technologies, the engineering manufacturer of fuel cells and clean energy, posted numbers below estimates. The margins compressed about 5 percentage points to about 22.6%, trickling down to lower profits, which were about 40% below estimates. The company expects more order inflows in the second half of the year, and the current order book currently stands at 1,500 odd crores. Then we have NBCC, the buildings and constructions company, posted revenue 11% above estimates, but the profits were a miss by about 23%. The decline in the real estate segment, which has about halved over the last year, suggests a shift in focus to other segments. It was a softer quarter on a sequential basis as well. Additionally, the company has been awarded an order for redevelopment of the GPRA colony at Sarojini Nagar, New Delhi, for a total contract value of about 956 odd crores. Then we have Healthcare Global Enterprises, where the revenue was up about 13% on a yearly basis, and the profits were also up about 50%. So the margins really, while they softened from 17.53% to 15.95%, then we have Orchid Pharma, where the good quarter was delivered on the back of margins improving and revenue growth, which remains strong at about 40%, carrying the company out of the losses which it incurred over the last year to the tune of about 150 crores. Then we have Sanofi India, a patchy quarter as revenue and margins compressed. Exports for the quarter grew about 30% over the last year. Then Paramount Communications had a revenue uptick of 28%, and the margins are inching up towards 8% numbers. The profits doubled to 14.5 crores this quarter. Then Kempla Sanmar, a weak quarter was indicated by the estimates, and the revenues were a miss, by 90 odd crores, but the net loss was much wider, posting about 63.97 crores. Then we have, lastly, we have SEPC India, where the revenue over doubled at around 143 crores, and the company is again emerging out of losses to the tune of 31 crores on the back of growing volumes. So that's a summation of all the earnings that I've been tracking. Back to you, Hiril.
Thanks so much for getting us all the details. I think these are names we will be watching out for pretty closely, because the action is expected in the broader markets as well. In fact, Mika will be joining us soon in terms of getting us all the earnings that have been in focus in today's session, as well as another stock that is in focus is Zee Entertainment, as we already spoke about it, that the volumes did see a strong surge in yesterday's session, whereas if you see in terms of the open interest build up as well, that was pretty strong. In fact, Mika is already with us. Mika, what's on your list with regards to where earnings are concerned?
Good morning, Hiral. So first we have Mazgaon Docks. The company's net profit went up 39.8%, while revenue and EBITDA were down. The company's order book stands at 39,117 crores, with 83.52% of the orders from the shipbuilding segment and remainder 16.47% in the submarine and heavy engineering segment as of June 30th. Second, we have Steel Authority of India. The company's Q1 results beat analyst estimates on all fronts. Revenue was up marginally by 1%, while EBITDA and net profit were down 28 and 74% respectively. Margins also saw 280 basis point fall. Next, we have Torrent Power. While revenues beat estimates at 7,327.62 crores, EBITDA, the margins and net profits missed the estimates. EBITDA was up 11.7%, margins were down 12 basis points, and the net profit was up 6%. The company's total capacity under its thermal generation portfolio as of June 30th stands at 3,092 megawatts, out of which 2,730 megawatts is gas-based, while the remainder 362 is coal coal-based. Additionally, the solar capacity stands at 263 megawatts and wind at 919.5 megawatts. Then we have Dollar Industries. Revenue and EBITDA was down this quarter and net profits saw a 44% fall, and the margins also decreased by 166 basis points. The company has also forayed into the exclusive brand outlet segment this quarter and currently has 17 EBOs across India and aims to reach the 125 number by 2025. Furthermore, the company has added 12 new distributors in Q1 under its Project Lakshya, which focuses on retailers and distributors and creating a value chain. Project Lakshya's share in the domestic revenue stood at 27% this quarter. Then we have Container Corporation of India. Revenue fell 3.5%, margins decreased by 340 basis points, and EBITDA and net profit both fell by 17%. The company also declared its interim dividend for the financial year of 2024 at rupees 2 per equity share for a face value of rupees 5, each amounting to aggregating to 121.86 crores. The record date set for the interim dividend is August 19th. Then we have NCC. Revenues were up 31.88% to 4,380 crores. EBITDA was also up 33% and margins improved by 8 basis points, and net profit also grew 24% to 174.36 crores. And lastly, we have Ugar Sugar Works, which saw degrowth on all the fronts. Revenue and EBITDA were down by 42 and 75% respectively. Margins fell by 375 basis points, and the company reported a net loss of 9.14 crores this quarter compared to the net profit of 5.14 crores a year ago.
Thanks, Mika, for getting us the earnings. But another stock that did report earnings yesterday was Zee Entertainment. But post earnings, the most important announcement that came in was the NCLT approval with regards to the Zee Entertainment and Sony merger. What are analysts and brokerages making out of it? What do they have to say? Because clearly, yesterday's session, we did see some strong moves on the counter.
Yes. So as we all know, the National Company Law Tribunal approved the scheme of arrangement and dismissed all the objections against the Zee-Sony merger. Some brokerages have come out and notes on Zee. Previously, when we saw the notes as of yesterday, they were positive on Zee. However, the verdict on the Zee-Sony merger was the biggest overhang in the brokerage notes. But today, some brokerages have come up with new notes. First, you have MK Research. The company maintains its buy rating at a target price of 335 rupees. The merger has already received the necessary approvals from the exchanges and the CCI. Plus, NCLT's approval removes MK's merger uncertainty discount of 10%. The brokerage also believes that the promoter proceedings are unlikely to derail the merger, and it reinstates its previous EV/EBITDA multiple of 9.5x from the 8.8x that was given earlier on merger completion and sight and improving our business outlook. BofA Global Research has also reinstated its coverage on Zee Entertainment with a recommendation of buy rating. The brokerage has set a price target of 415 rupees, which implies a 47% increase from last year's price. In other news related to Zee, the company's subsidiary Zee Studio Limited has also entered into a share purchase agreement with Elitecast Media to sell its entire stake in another subsidiary called Zee Unimedia, where Zee Studios has 100% shareholding in. The cost of acquisition is set at 2.5 crores.
Right. Thanks, Mika, for getting us the details. It's going to be interesting to see if the momentum continues in today's session as well, because Zee has seen prices of almost 600 in the past as well. So whether the analysts expect it to, expect the synergies to get it back to those kind of levels is going to be interesting. But moving on, let's see which companies will be reporting numbers today. You have ONGC that will be reporting numbers, so watch out for that counter pretty closely in trade. But apart from that, Apollo Hospitals will be in focus as well. Monal joins us back with the details as to what's on the cards and what are the key expectations. Monal, over to you.
So for hospitals, Hiral, quarter one has essentially been a seasonally weak quarter. This is very similar to the tone that we've observed through the quarter, where most hospitals have kind of reported softer numbers because it's the summer season, lesser infections. That's the story. So that is one thing that we need to keep in mind. Also for Apollo specifically, their 24/7 digital arm has been continuously making losses. So it's important to watch out what happens on that front of whether it turns profitable and by when. That's going to be an interesting thing. That commentary is going to set the tone for the even post the results. The Bloomberg estimates peg the revenue at 4,650 crore, net profit at 198 odd crores, EBITDA at 533 crores with margins coming in at 11.5%. That's the consensus estimate.
Right. Thanks, Monal, for getting us the details. We will be watching out for more on this one. But moving on, a few newsmakers in the making, and the first bigger one is HCL Tech. A mega deal from Verizon Business is what they have garnered. Saloni is standing by to get us more in terms of what would this mean in terms of the deal and how does it stack up. Saloni, good morning. What do you have for us on HCL?
Good morning, Hiral. So as you said, we have big news from HCL Tech. So the company signed a new mega deal with Verizon Business for a contract value of $2.1 billion for a 6-year term. So HCL Tech is going to be Verizon Business's primary collaborator in all deployments involving managed network services globally for enterprise customers. So Verizon Business will be leading sales, solutioning, and customer acquisitions, while HCL Tech will lead the post-sales implementations and ongoing support. So in order to execute the tightly coordinated balance of responsibilities at an enterprise scale, a select group of Verizon Business staff will transition to HCL Tech. So post the signing of the deal, HCL Tech announced that the company expects this deal to have a positive impact on its revenue over the coming 6 years, beginning November this year. Also, looking at the IT sector as a whole, we have witnessed a slowdown in the deals being backed by the companies at an industry level. But amidst this slowdown, we have seen Infosys, TCS, and HCL Tech bag mega deals within the $1.5 to $2.1 billion range over the last couple of trading sessions.
Thanks, Saloni, for getting us the details. So that's HCL Tech. But apart from HCL Tech, you've been tracking a couple of other names as well. What do they tell us? Right, so that's with regards to where, the other names are concerned. But clearly, apart from itself, there were a few other names that have been in focus as well. And clearly, I think we'll have Varsha who will be with us to get us more in terms of the other names. Varsha, apart from an HCL Tech, which are the other names that you have been tracking?
There are few stocks that one needs to watch. So the first one is DLF Medanta. Now the companies have entered into a 50-50 joint venture in a special purpose vehicle to set up a 400-bed multi-specialty hospital in Delhi. The next company that we have is Carousel. Now the company has acquired almost 43,379 square meters of land in Bhavnagar, Gujarat, opposite its existing factory at the cost of almost 9 crore for the future expansion and the new projects, if any. Also, with this, the company has now a total of almost 1 lakh square meter of land available for future expansion. The next company that we have is Adani Enterprises. Now, company has denied reports of exiting Wilmar Ventures following media reports which said that the company was planning to sell its 44% stake in the Adani Wilmar. The next company that we have is Scient DLM. Now, the company has won the Excellence Award from Honeywell for its outstanding performance and partnership in the development of products through early supplier engagement. The last company for today we have is SJVN. Now, SJVN Green Energy, a wholly owned subsidiary of the company, has inked 2 MOUs, one with ONGC and other with Sambhar Salts Limited, a subsidiary of Hindustan Salts. Also, subsidiary SJVN Green Energy has bagged a 90 megawatt floating solar project at the Omkareshwar Reservoir, Madhya Pradesh, and the project cost is around 610 crore.
Thanks, Varsha, for getting us all the details as well. So lots to watch out for in terms of broader markets. But, 3 key stocks that we are watching out for in today's session is Zee Entertainment from the broader markets, as well as HCL Tech on the back of the order win and its impact on the IT sector as a whole. And very lastly, you have Reliance Industries that will be in focus as well on the back of the Geo Financial Services shares that have started to get allotted to shareholders. So the key point that we will be watching out for from here on is the Geo Financial Services listing date that could be announced sooner or later. So watch out for three names pretty closely in trade. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.